Hi, this is Randy Finney with the right side of the chart, and this is a mid-session update for Friday, September 24th, 2021. I'll do a quick overview on the broad markets and then just quickly touch on some of the other trade ideas I've highlighted recently, including crude oil, natural gas, lumber, wheat, some of those commodity futures. Oh, gold. I definitely want to point out gold, platinum, and palladium. I want to do updates there. Those are probably, I think, something definitely worth pointing out in gold. And as well as platinum and palladium. All right, diving into the charts. Okay, this is the same 60-minute chart of QQQ I've been posting recently. This was our sell signal back here. Short, calling it down to T2. T2 was hit. Recommended for active traders to reverse go long for a bounce up to at least T1, which was hit, and possibly T2, which is the backfill of the gap, Friday's gap. So Friday we closed at 373.82, and yesterday we reached a high of 374.04. So that's almost a perfect gap backfill. That's the closing candle right there. So there's your gap, and so that's that. Now, I was hoping and still am that we can get some resolve today, but we might not. So it's midday. The markets may keep everybody guessing. In other words, we already backfilled the gap. So that leaves no unfinished business for the Qs should they want to resume the downtrend, which is still my preferred scenario. I did make an update in the post that I put out this morning, the updated QQQ chart from yesterday's close. I posted earlier today before the market opened. I did a follow-up post underneath there or in the comment just mentioning, look, if we happen to pop that, that's still, of course, anything's possible. But I mean, I even gave odds. There's a fair chance, I'd say fair, maybe 20% chance that we'd pop that. Talking about the top of the gap right there. There's a potential downtrend line that comes in if we do. You have a couple reactions so far. And then we could also run up here to that 378.44. That's the next big resistance. Remember, we had these two trading zones, one right here and one up top. I know I'm making this chart look like a Christmas tree, but so you can see what I'm talking about. So I just wanted to point out that should we or should QQQ happen to take out the top of the gap, then you would have re-entered this recent trading range, and we could rally up there. 378.44 is still formidable resistance, and I'd put it 20% chance that's going to happen. Again, these are just rough numbers, give or take. And then if that happens, it would increase the odds that we could then go on and go on to new highs. Right now, I'd put it below around 10% chance that the market's going to go on and break out the new highs. But if we get there, here's what I said: everything's dynamic. The odds start to change because we've taken out. This is again where the sellers should step in at the gap. They did so far. So far so good. However, we're not seeing impulsive selling. I would have much preferred to see a pretty impulsive rejection off that level. We did get a gap down. We gapped down today, and so the onus was on the bears to take the ball and run. Gap downs, trap longs that were chasing this rally late yesterday. This was objective to go long here. Certainly not, in my opinion, to go long there. And this is just not ideal price action, but it's not the end of the world. So let's see what happens today. Should we dump into the close and get away from there, especially take out today's lows? That would give me a little more confidence, a little check mark that we're going to go on down, take out Monday's low, and continue much lower. That is still my preferred scenario. But if they can rally it up there, look, if they close it at the gap again, nothing's changed. We backfilled that gap yesterday morning on that first candle. We traded there all afternoon, all day yesterday, closed right below it. And again, so that's it. Let's not overly complicate this. Resistance is resistance until unless taken out. If it's taken out, obviously that's near-term bullish. You still have another big level there overhead, and so we'll wait and see what happens. If anything big happens today, something like this or something like this towards the close, I'll do another update. Otherwise, I think it's a great day to kind of shut down early and get some things done, because I don't see a whole lot of opportunities, for active trading, day trading today. One other thing I wanted to point out, see this blue line here, this marks this is a Fibonacci retracement. So I marked what that blue line measures is from the highs, that was the previous high right there before the sell signal came in QQQ, down into Monday's lows. So it measures the correction so far to where my final near-term target, that T2 was the second and final near-term target where, bounce was expected. And that, if you can notice here, you probably can't see it too well on this chart, there is the 61.8 fib. You have your 38.2, 50%, and 61.8. That's your typical counter trend bounce range, anywhere between that 38.2 to 61, and that's about right where we went. Here you can see it a little more clear here. So there's that fib line, starts right here. What 100 means, if we get all the way back there, we've retraced 100% of the drop. And right now you can see here's a 61.8 fib right there, and so that's what we did so far, which says, so far at this point in time, run-of-the-mill correction. And that's why the odds start to increase or diminish. Let's say they start to diminish, that we're going to have that another leg down and hit those next targets I've laid out on the daily chart. If we go up there, somewhere in here is a 78.6% fib retracement, and that's also here. Let me put that line up. It's probably going to come in right where I give you that price resistance. And edit here. There we go. 78.6 is your next fib. And look at that. Call it coincidence, call it what you want, but so often I'll put up Fibonacci levels and they perfectly align. That's that same trading zone right there, and the price resistance level that I gave you on this board right there, 378.44. Here, we'll turn it on here and see where it comes in. Boom, there it is. You can see the blue line right there. So that's it. That's your next resistance. It's Fibonacci resistance and price resistance. And then after that, it doesn't guarantee new highs, but it pretty much increases the odds quite a bit if we take that out. So again, ideally, this is what you want to see from here. You don't want to see another a breakout above that level for the bearish case. I just wanted to hopefully make that clear. So we'll see. We'll see how things go. SPY, this is what it looks like on the 60-minute chart. I also put up some fibs. The fibs go from the highs down to low, and you can see almost perfect 61.8 retracement there as well. It's hard to see in the video, I imagine, but that's the 61.8% fib retracement line there, and that's what caps SPY. You also have two lines to watch. You have an uptrend line off the lows right there, pretty well defined too. Look at all these reactions on it. Quite a few distinct reactions, and you have a downtrend line. So it's kind of a fat triangle pattern, if you will. Bullish if we can get much above there, and a break down below would be bearish and probably spark the next wave of selling. So that's it. Let's move on to the other trade ideas. I'm going to start out with gold. Gold's been, as you know, chopping around. Nothing has changed on the long term or the daily time frame. This is, and I know it's a busy chart, but the most important features on this chart right here, this buy zone that I've highlighted for many months now, was a solid support down at the bottom of it, moderate support at the top. Very big level to me, about 158. That was a target, when we topped here, where I said I'd look to re-enter after closing out on my, precious metals and miners. And we've had several opportunities there. We entered the buy zone again, and we're still in it. So from a long-term perspective, it's been choppy. It's a choppy trade. We're not really going up. We're not going down. Gold, I believe this to be bull market consolidation. When you look at a long-term chart, this is what it looks like. That was the beginning of the most recent, the current bull market in gold. It bottomed in late 2015, back in December. Consolidated for a while and then took out that big 130 level. Been moving up. And again, as of now, I'm still viewing this as bull market consolidation, just like we've had in the past back here. We had it was over a year-long consolidation. It dropped, about 30% in gold. It took about 8 months. And then the bull market in gold resumed. So we'll see. Only time will tell, but let me show you what I'm looking at. 60-minute chart, we have, for the first time in a while, positive divergence right there. And I want to check the futures and show you the divergence there as well. I already have that marked up. There it is. So this is the chart. This, again, remains a big level. Been talking about it for a long time. It's resistance. and a buy signal will come, a significant buy signal. I think it'll be very bullish if and when we take that out. Now we're well below it, but that's that 138-ish level right there. And down below we have, it's been choppy lately, but 1777 to me is still a pretty important level. We've had a couple drops through it, then we get back above it. Quick drop through it, got back above it. Tried it here, but we got rejected. But now look, you can see we do have some nice divergence building. So here's the pattern I'd be looking at. This is what you might want to replicate if you're trading gold futures, GC. You have a pretty nice downtrend line, because by that I mean you have some distinct reactions there, and you have the positive divergence. So it's taken the shape of this bullish falling wedge pattern on the 60-minute chart. Now that divergence could extend. A wedge can continue to work like this, and these lines could continue to extend as long as we have the divergence in place. If we take another leg down, maybe run up at the top of the trend line. But these are your levels to watch. So if we run up at the top of the trend line, maybe a rejection. You could try to active trade short down if you want to get cute. I don't try to get cute and start gaming the micro bounces when you get closer to the apex. There's still a little ways to go early on, and if the trend line has more to go, you can certainly try to reverse and get a short there. But I think it's better off, since it's an inherently bullish pattern, best to wait for the breakout. Now you can go long at the bottom of the wedge. You can be long here. We have positive divergence. I mean, odds favor when you get these divergent lows in gold. You had one there. Sooner or later you're going to get that pop. So you can go long. It'd be nice if I had support here, and I can put a line. I don't want to force this line, but give or take, we'll call it very minor support. There were a couple reactions. One reaction there. Almost a reaction there. We had that couple reactions in the last few days. So, aggressively you could step in and buy it here at about, with a stop somewhat below 1739 in anticipation for a breakout. But I wouldn't go anything heavy into gold as an, active trader, swing trader, until you get a breakout. So it would look something like this. Partial position here if you want, or wait for 117 or 1777 to get taken out, and the trend line. That's what I like about it. You have dual resistance. That 1777-ish price, or call it 1780 if you want, because we've had a few spikes above, and the downtrend line. So there's your setup in gold. But I like the fact this is some pretty nice positive divergence here on the 60-minute time frame. Okay, and recently, a few weeks back, I laid out a case for a short on palladium, and just the other day, I laid out the case to reverse that and go long palladium and platinum. I had a little preference to platinum, still do, but they both look good. And so what happened is we had this positive divergence forming here, divergence building, had a little minor trend line I talked about, broke down, back tested, and we had a nice run from that divergent low. Platinum ran up almost 13% right into that trend line I had on there in the video the other day. I highlighted this one earlier in the week. And so as expected, the initial tag of resistance, you've had a reaction. So I'm viewing this as a buying up. Typically securities, if this is a new uptrend, they move in waves, and this is just a single wave up. So it's likely that we're going to have another wave down, pull back. It could come down all the way this low. I don't think it will. I think the buyers will step in and buy it. But if it does, I can tell you right now, another pullback to that 951 level would be an objective long entry with a, go long here with a stop somewhat below. We may not get there. So if you took this the other day, or you're in it, your next buy signal or objective long entry is going to come on a breakout of the downtrend line. Then I expect a reaction off that first target there, 1027 right there. And if that breaks out, whether we get a reaction or not, that could open the door for a rally all the way up to that 1145-ish level right there. So platinum looking good. And if you don't trade futures, let me grab that chart. There we go. PPLT is your ETF that you want to trade. That's the ETF physical platinum shares. In the video the other day, laid out this divergent low. I laid out the fact it was at support, so there was the case to go long wherever it was the other day. And I had listed this downtrend line. And so what happened is we reversed almost a perfect tag of the trend line, and the natural pullback. You wouldn't expect such a strong run from the bottom there to come up and blast right on through the trend line. So the odds favored a reaction, and that's what we had so far. So we checked the trend line, we had a pullback, and now we've pulled back to this $90 support level. Former resistance, now support, with a gap below. You can, it's a little bit below right there. So I'll call it about 90 down to about 89.70 or so is support, and so I do think we'll probably have another leg up here soon. And if we break out above that level, I'm going to give you one more level to target. If we break above the trend line, see some decent resistance coming in there around 96.10, so that could be your next target if you are long platinum. And again, positive divergence here on the daily time frame. And palladium was laid out again earlier in the week, bounced right into that 192.86 level. Well, that's what we updated that last. That line was originally created back all the way in April 2020, updated on August 24th of 2020. So that level is still coming into play. It was a big gap. You can see as the top of that gap right there as well. A lot of reactions back there, and boom. So the natural pullback. PPO starting to turn up. So I'm still, we've already got a decent bounce out of it. You could have certainly taken the money and run, whatever it was, 8% or so in just a couple days. I suspect we'll probably do a little more upside and then continue a resumption of a larger downtrend. Here's what it looks like on the 60-minute chart of palladium futures, symbol PA. You had the downtrend line, a nice clean, nice positive divergence on the 60-minute chart, hence the reason to cover shorts. This is where we shorted. Got that drop, cover that, popped it, broke out, and ran right up to that about 2040-ish resistance level. I could probably, and I will right now, going to add a line above it because we had a couple spikes through there. And that, that mesh as well. You can see these reactions now. So this is the level we need to take out, about 2064. We've had quite a few reactions on that level, and we pulled back. Look at this, right to support. So there's a case an objective long can be made on the pullback. Let's say you took quick profits there at that first target. You want to buy back in. This is where I'd buy back in right now with a stop somewhat below for a swing back up there. We've already hit the level a couple times. You could of course target it again or hold out for a breakout, and then that would be, and it still is my final maximum target there, about 2270 from where we're at right now. That would give you at about a 17% gain on palladium. And again, you can use the ETF PALL or this futures symbol PA. Nat gas is right back into this 5.168 resistance level. Remember, we had a break of the trend line here, triggering a sell signal right there. Been working our way down. Recently, we put in positive divergence on the 60-minute time frame on the indicators, just like we had negative divergence at the high. Counter trend rally. Still favoring a move down because we have not yet hit this target. I also had some longer term targets. I have to replicate this chart or redo it. I think it was on the 6-month chart. Let's see, how did I have it? It was about here. I'm going to have to update this chart. I had a line and it seems to have disappeared. Maybe it was a futures roll. There it is. Yeah, I'm still looking at a pullback to this trend line ultimately. But again, when you go back to that 60-minute chart, those are near-term targets. And I do think we'll have most likely get a reaction on around that 567 level, 576 level if we get there. And again, ideally need to cap this rally. I'd like to see it capped right here. And it's resistance, so I can say this. You could make an objective case to short it here or add to a short with a stop somewhat above and swing down there, or that trend line I just showed you. The grain's still looking okay. I'm not crazy about them, but they're still, they have been longs from back here. Breakout back test of the trend line, and I did want to point out we just took out or have taken out that 717 level right there, resistance level on wheat. Wheat futures, ZW, it should open the door for a move up to that 733 level. There's a little trend line working here. You might want to keep a stop under that trend line. And again, next target would be 733. If that's taken out, 745.50 or so right there. Corn, soybeans should follow. I've given you updates on those recently, so I'll just skip that. And let's just wrap it up with lumber here. That's nothing big to report today, but it's still holding up. And that is LB right here. So you have the uptrend line. There's our primary uptrend line. This is a 2-hour candle chart. But that next target, remember this was a target that was already hit there before at 692.31 after the breakout there of the bullish falling wedge pattern. So we've hit it once. It's still the next target, or in other words, you could take profits there again. But the fact we already hit it, as long as lumber can stay above this uptrend line, that would be ideal. Next stop should be about 747 change. And so far we'll see it's kind of disconnected from its correlation with the stock market. But I like this as sort of a hedge to index shorts right now. Something happened there that shouldn't have. Let me just take that time frame in. I just wanted to zoom down to 60-minute candles for you. Okay, I overzoomed. Anyways, nothing much. I just want to mainly say it's still above trend, and my charts are not happy with me right now. But well, there you go. Lines are gone. We'll wrap it up here. I'm going to take the rest of the day off. I'll keep an eye. I'll be around. Just going to do some errands around the house. And if I see anything big by the close or any other trade ideas that stand out, I'll get them out to you. But cannabis stocks really aren't doing much today. The ag input stocks, not much. So I'm just not seeing a lot out there. I think today we'll just kind of flounder around to into the close and then pick things up where we left off next week. This has been Randy Finney with Right Side of the Chart, and have a great weekend.